Are you ready to change your life? Looking to embark on an exciting journey towards building wealth through real estate investing? Well, you are in the right place. Real estate remains one of the most powerful yet accessible paths to financial freedom, open to anyone willing to educate themselves. Property can be an inflation-resistant asset, producing passive income for decades while appreciating significantly. Whether you are a recent graduate, a seasoned professional, or just someone who dreams of building wealth, this video is for you. Today, we are going to unlock the secrets of real estate investing. By the end of this video, you will not only understand the basics of real estate investing, but you will also be inspired to take the first step towards your financial freedom. What is real estate investing? This is like buying a house, but instead of living in it, you rent it out, sell it for a higher price, or even let a business use it. The goal is to make money from it. Whether you are a hands-on landlord or a passive investor, understanding the market is essential. Rental properties. As a landlord, you own rental properties and make extra money each month through rent payments from tenants. Owning rental properties can be a great opportunity for individuals with DIY renovation skills and the patience to manage tenants. Responsibilities include paying the mortgage, property taxes, insurance, property maintenance, finding tenants, and problem solving. Rental properties provide regular income through rent payments, and over time, the properties can appreciate in value. You are responsible for taking care of the property and making sure everything works. Choosing good tenants is important to avoid problems. It's like running a small business where your property is the product and happy tenants are your customers. Flipping houses. If you enjoy transforming spaces, house flipping might be your calling. Flippers buy undervalued real estate, renovate or improve it, and then sell it for a profit. You pay attention to when it's a good time to buy and sell houses. If the housing market is doing well and prices are rising, that's a good time to buy a house. Then you fix it up, like adding new paint or fixing broken things, to make it more valuable. When the market is hot, prices are high, they sell the house for a profit. So it's like catching a wave at the right moment to ride it to success. Real estate investment groups. These groups allow you to invest in real estate without hands-on management. You need to pool funds with other investors to buy properties collectively. You will receive a share of rental income and potential appreciation without day-to-day involvement. Real estate investment trusts, REITs, are like dividend-paying stocks backed by real estate assets. Invest in publicly traded REITs, which own and manage properties such as commercial buildings, apartments, or mortgages. Imagine a basket with different types of real estate inside. Apartments, malls, offices, and more. Diversity. When you invest in a REIT, you're part of that basket. So, if one type of real estate doesn't do well, others might balance it out. Liquidity. It's like having a magic door. You can enter, invest, or exit, sell anytime. Unlike buying a whole building, REITs let you join the party without needing a huge down payment. In short, REITs make real estate investing easier for regular folks. Homeownership. Owning your own home is a form of real estate investment. While it doesn't generate rental income directly, it builds equity over time and provides stability. Just to remember that homeownership involves ongoing costs such as maintenance, mortgage payments, and property taxes. Take advantage of property value increases from local economic growth. Unlike stocks, real estate provides physical assets you can touch. Real estate works for everyone who is dreaming of earning passive income that may one day allow thriving without a 9-to-5 job relying solely on property cash flow. Step 1. Setting clear goals. When first exploring real estate investing, having specific written goals brings clarity on why invest in the first place. Ask yourself, what do I want to achieve? Financial independence? Passive income? Supplemental retirement income? Funding for kids' college? Quitting 9-to-5 job to start a business? Building generational wealth? Owning 5 single-family rentals free and clear? 10K/month passive rental cash flow? Buying 1 apartment complex by 2025? Be precise with numbers, property types, locations, and timeframes. Consider framing goals where visible as a constant reminder while working towards build your real estate empire. Step 2. Education. Knowledge is your best investment. Is power, and in real estate, it's the key to making informed decisions. When we consider real estate, a common trap is jumping in first without deeper knowledge. It's wise to learn local regulations around being a landlord, accurately assessing deals beyond surface level, budgeting operating expenses like taxes, insurance, vacancies, self-managing tenants, or hiring support. Plenty of investors regret not taking time up front to skill up in above areas through books, podcasts, and meetups. They overpay properties, face headaches from bad tenants, or realize thin margins after costs. The good news? Real estate education is way more accessible than ever before. Learn niche knowledge around your property types of greatest interest. Be a lifelong student. Let education give you confidence and vocabulary to collaborate with experts like lenders and realtors efficiently. Lay your stable real estate foundation through diligent study habits. Effort pays itself back in profits and peace of mind. Step 3. Research the market. Understanding your local market is crucial. Has the neighborhood been rapidly developing with new restaurants or industrial parks that might positively impact property values? Building permits signal new apartments coming soon that could alter competitiveness? Many first-time investors lose money by failing to research underlying market forces and simply try timing the next hot area. Ensure you know full area potential upsides and risks. Thankfully, market data is far more abundant than ever before. Follow local real estate publications and economic centers. Drive neighborhoods getting to know metros. Realtor groups eagerly share insight as well. Let diligent ongoing local market research guide your investing strategy and pinpoint value opportunities. Data brings conviction and clarity exactly where to build and buy. Step 4. Finance. When we explore getting into real estate, a key requirement is figuring out financing. Whether using cash, loans, or private public investment capital, it's essential to analyze how much we can contribute as down payment, monthly costs for mortgages, repairs, etc. Returns needed to attract partnerships, contingency funds still allowing healthy profits. Thankfully, real estate offers flexible leverage options. We can buy property for a portion of the total cost through mortgage lending or peer lending platforms. This multiplies returns on our invested capital. Still, underestimating carrying costs and over-leveraging leads lots of first-time investors into trouble. Repairs pop up, interest rates rise, recessions hit. Run detailed pro formas on potential deals. Connect early with lenders to understand qualifying terms before identifying properties. Seek mentors navigating similar projects locally. Step 5. Evaluate risks and rewards. Each strategy and property carries unique pros, cons, and uncertainty. It's wise to examine with any deal. Market cycle risks, budget risks if costs exceed plans, management challenges if self-managing, capital risks if can't cover mortgage, macro risks like rising interest rates. Yet also focus on potential rewards, appreciation over decades, monthly cash flow compounding, forced equity paydown over loan terms. Benefits from increasing local economic activity. Let balanced risk-reward analysis guide your real estate investing path. Stay conservative on worst-case scenarios, but keep the big picture of wealth possibilities in focus as well. Step 6. Network and collaboration. Connecting with others already investing in our local market is invaluable. Networking builds critical knowledge plus relationships leading to deals. It's ideal to attend real estate meetups to learn lingo and listen to strategies working in your area. Talk to active regional investors about current profitable niches they focus on. Ask about partnerships to mutually benefit from others' expertise. Lots of first-time investors try going solo before realizing how much they don't know. Networking opens doors by humbly learning from those ahead on the path. Over time, your give-and-take collaborations compound as joint ventures on deals, sharing contractors or property managers, and bouncing ideas off one another. Let networking and collaboration accelerate your real estate investing goals. Step 7. Take action. There can be a temptation to get stuck over researching and planning, but never pulling the trigger. It's wise to set measurable milestones each week, even if small, like touring 2 homes or interviewing 1 property manager. Focus efforts on priority niches with most perceived potential. Follow up on networking conversations to strengthen relationships. Every professional real estate investor started somewhere small themselves before momentum kicked in. Mistakes will happen but can refine future decisions. Getting feet wet releases hesitation, builds know-how faster, and uncovers real problems seeking solutions. Let action orient you as a doer, not just dreamer. Imperfect progress compounds better than procrastination over finding the perfect opportunity. Build your empire brick by brick through regular action aligned to your bigger goals. Step 8. Build momentum. It means taking small steps initially and gradually increasing your efforts over time. It's like pushing a snowball downhill. It starts small, but as it gathers momentum, it becomes unstoppable. Imagine you have $1,000 saved up. Instead of spending it all on expensive gadgets or luxury vacations, consider investing it in real estate. Start small, maybe with a small property or a fixer-upper. Once you gain some experience and confidence, reinvest the profits into more properties. Snowball your investments, and soon enough, you will have a portfolio that generates multiple streams of income. Real estate investing is a proven method to build wealth over time. And the best part is, you don't need to be a financial expert or have a ton of money to get started. You just need the right mindset and the willingness to learn. So, are you ready to take control of your financial future? Start building momentum in real estate investing today. You are now equipped with the fundamental steps to begin your real estate investing journey. Remember, success in real estate investing takes time, effort, and persistence. Start small, keep learning, and take action. All right, now it's your turn. What is the one thing holding you back from starting your real estate investment journey? Let us know in the comments below. Thank you for watching, and I hope you found this video informative and inspiring. Remember, every journey begins with a single step. So take that step today and start building your real estate portfolio. Don't forget to like, share, and subscribe for more content like this. Happy investing!